it's time for stocks on the editor's radar. Let's begin then with Gland Pharma. That's in the news in today's trading session, largely on the back of the fact that Q3 has missed street estimates third time in a row. In fact, you have the revenue growth this time, which has slowed about 10% on a year-on-year basis, and that's largely, Nikunj, on account of the fact that the US sales as well have slowed on a quarterly basis.
They represent the injectable business. To just break it for our viewers, injectable business essentially medicines which are injected. The minute you're talking about an injectable medicine, it's a complex business to be in. It's a complex business. It's a complex business which is a high margin business. But guess what? This complex business, which is a very niche business, is slowing down. Now 16% drop sequentially. They're making a case that, look, there was a syringe shortage, but then why for the third quarter this kind of a performance is there? Some of the pharma stocks, Avan, post-COVID, they had got massively re-rated. And now that realization is kicking in that the market is tough, the market conditions are tough, and the US generic pricing, in a sense, will continue to get eroded as healthcare costs, they continue to come down. So there is a big change in the way how you were looking at pharma as a cluster, especially US generic companies. And that, in a sense, has derated some of the stocks. And in this kind of a market, when you don't deliver, you know the market reaction. Q3 miss, the market reaction immediately is going to be down. Q3 miss or quarterly number miss for the third time in a row for an expensive stock, that's unfortunate. But the stock is now going to be really on the receiving end in terms of the short-term market direction.
All right, and the results clearly are going to be the key cause of that. Moving right on then, L&T, let's pull up that stock. It's been an interesting 1 month as well. The stock has seen a pretty smart rally. Now, Citi has got a buy rating with a target price at 26.30. They're saying that there's the capex cycle, the boom. There's also the fact that the company is likely to see an up move in their order inflows, and even the E&C margins are providing comfort and are likely to be healthy in the third quarter. This has been quite a standout, Nikunj.
Avan, the minute you say industrials and cyclicals, the first name which comes on the top of your mind is L&T. But frankly, if you look at the stock performance, and I'm just going to establish this with the stock performance here, look at L&T. That's yesterday's change. But, Patricia, producers, you will find 3 graphics here. The 52-week change, and look at the change in the L&T stock in last 5 years. You'll be surprised that at a time when most of the industrials and cyclicals and other stocks which represent the capex theme, they've got massively re-rated. L&T has done nothing great, 16% in last 1 year.
It's a sleeping giant within the engineering space.
It is a sleeping giant. It's a late bloomer, Avan. But remember, L&T has 2 big businesses. What L&T, let's say, was in 2018, it's given a 60% move. But to put things in context there, they've incubated big IT businesses in that. I look at L&T as a combination of core business and the IT business. The IT business is about 35%, the core business about 65%. That 35% business is growing at a rate which is higher than the industry average, but the core business now has potential to grow. Defense stocks have got re-rated, railway stocks have got re-rated, industrial stocks have got re-rated. Why poor L&T is not getting re-rated? So I think now there seems to be a acknowledgement that, oh my God, how did we miss this obvious name? That's what Citi is saying. So it's in a fine shape right now. And with IT also stabilizing, I think this really could be the stock to watch out for this year.
Yeah, and if the momentum in the last 1 month is anything to go by, maybe it is a late bloomer that will see its time in the sun. Okay, let's move right on then, and Aisha, find out what else it is that we're chatting about in terms of stocks.
Yeah, before we move forward and discuss more of the stocks in news this morning, here's Gaurang Shah telling us why he likes NCC as a fundamental idea.
At state level and at center level, all the governments are trying to speed up infrastructure related, construction activities, optimize on those opportunities. So our sense is that with the kind of order book that NCC has, the execution that they have shown and expecting that execution to pick up going forward from here on, thereby translating that into revenues and profitabilities on the balance sheet. So NCC, we believe, will have tremendous performance on fallback of execution of order book, and the run rate in terms of realizations on the balance sheet will also improve. Not to forget, I think our sense is that not only in the state of Andhra Pradesh and Telangana, but elsewhere also, they are likely to get many more orders and thereby translating them into earnings pretty soon. So NCC, as of now, we are working with a target price of 110. This is with whatever you've seen up till now in terms of order book and earnings. In case if that improves, then by default the targets get revised upward. So start nibbling into it. Don't put all your money at one time.